another example. In this case, we are going to use the relative sales value approach. Now, relative sales value, that might sound new. This is going to be when basket purchases are made. So we've got batch 403, 404, 405, right? As a company, we're just making batch purchases. The batch purchases involve a group of varying units. The purchase price is going to be paid as a lump sum amount. The lump sum price is allocated to units on the basis of their relative sales value. Let's see how this plays out. Banana Inc. purchases 3 different batches of inventory. We got the 3 batches here in a basket purchase, paying $600,000 for all 3. So we paid $600 for all 3 of these. Then they were sold for different varying amounts, right? We sold batch 403 for $150, 404 for $300, and 405 for $400, for a total of $850. So we made profit in total of $250,000. That's great. That's wonderful. But what's the cost assigned to each of these here? Well, that is interesting. Okay, we are basically going to allocate that based on the sales value. So if we made $150, right? If we made $150 on 403, we're going to do $150 divided by $850, right? That's the total sales value. Basically, like, what's the cost driver? In this case, what can we actually allocate it to? Well, we don't know individually how much each batch cost. We do know how much they sold for. So it's just percentage, right? Just percentage. We've seen this sort of process before. So we get a percentage, right? And that's going to get us to our allocated cost for each of these. We do the process, right? 300 divided by 850, that gets you the percentage of the sales value. Multiply that by the total cost, gets you the proportion of the cost that belongs to each of the batches. And then you could do that for the gross profit, allocate that percentage as well to determine what belongs to each batch. Just different processes, lots of different methods here that we will see and practice through.